One, two, three.
Dale.
Hello, Solving for X community. Hopefully, you guys are having a great day. Today is a Friday here, kind of like a cool day here in Georgia. I'm here again with my son Ronald. So you got Ronald, and my oldest son is the quiet professional. He's the manager. He's not here today. I'll be talking with him actually about UFC. Those are the titles that I'll be talking with him. UFC fights coming up this weekend. Kind of like relax my mind. I'm here with my son Ronald. He's going to increase my blood pressure. So kind of like be ready to for another exciting episode. And hopefully you guys are learning every single day. And so what's going on, son? What was your
Well,
day?
before I raise your blood pressure on this episode, I want to thank you first for adjusting the time. I felt a little under the weather on this Friday day where I lost my voice completely. So I'm drinking green tea. I absolutely hate green tea. The honey does not make it better. I don't know why they told me that, but it really doesn't. So if my voice is giving out, probably be passing it to you, but we'll be good to go, I think. So,
Well,
but yeah, thank you for adjusting the time because I know we normally do it at 9, and
yeah.
we're doing it 9 o'clock my time, so Chicago time, and 10 o'clock Atlanta or East Coast time. So we did it actually at 3 o'clock Chicago time and 4 o'clock Atlanta time. So thank you for adjusting. My dad was like, "Man, I got a lot of things to do today." I was like, "You don't even work. What do you mean you got a lot of things to do today? You mean you're gonna hike a little less?" And he's like, "Hey, my saying is health before wealth." And I was like, "Okay, well, at least you really mean it when you say it."
Yeah,
But yeah,
yeah,
no,
yeah.
thank you for adjusting
Oh,
to
you're
my
welcome. So anytime.
schedule.
The biggest thing that you messed me up on today, I'm not sure, you know what day it was yesterday?
Earth Day.
Oh, no, you got it. You really got it. Man, I thought I was going to get you. You really got it. Man. That's good. I'm proud of you, bro. You really got me. You really got me. You really got me. Oh, wow. So I was going. I thought you were going to say nope, and I was going to go. Go to with him. But anyway, I'm glad that you did. And today, what I was supposed to do is, when you called me and asked me to see if you want to do the podcast early, uh, I was going to take the recycling glass to the recycling center today. That's part of my thing to go do. And obviously, we do recycling here every 2 weeks on Fridays. So that's our contribution, I guess, to Earth. So I'm still believing the Earth, even though I'm getting somebody. Actually, one of your cousins. He was reading one of the comments that I made that I was born in 1922, 1912.
1912. Yeah.
Yeah, so I'm a little bit old, but I still love the Earth and believe in the Earth. So that's what I was planning on doing. But
Actually, I never knew that about you. I didn't know you were environmentalist.
uh, I know, right? You would think not to go into political parties, but yeah, no, I love hugging trees.
Yeah, I
Not to
thought you
be
were
a
oil guzzler.
no, man. You'd be surprised. Sometimes I go hiking and I see a nice little plant or flower. I'll be taking photos of it. So next time I share the flowers in here, share my sensitive side with you guys and stuff. But that was pretty cool. Uh,
A little lily pad.
yeah, yeah. But right getting into it, and I know the audience power interest to know. I don't know. I got a feeling that your voice is down a little bit. Maybe because the crypto market, everybody's like collapsing, it's going down. So I figured that you probably were screaming and yelling, "Oh no! Oh my God! My portfolio!" Remember, my sister don't know what a portfolio is, so at least you don't know why you were screaming and yelling. But anyway, was that the reason why you're losing your voice?
No sir, no sir.
No.
I yeah. So the markets have been going. I think Bitcoin hit a low of 47.5. 47.5. So I mean, yeah. I think overall the market's freaking out. But me, 6 figures deep. Hopefully, we don't get into the 200,000 loss territory. I think right now I'm at about 150 loss on my portfolio. So portfolio, the easiest definition is if you have multiple cryptos, multiple stocks, you own a couple properties, all that stuff is what you could define as your portfolio, right? So if you have a 401k, you can throw that in your portfolio. So portfolio is just a collection of assets. It's basically the easiest way to define portfolio. Plus, also, if you hear terms that we say and we don't necessarily give a definition to it, don't be afraid to go on Google and search for the term and find the definition. Or if you want to leave it in the comment section, we'll be sure to, especially if the topic's big enough and we get enough people that say, hey, we want to talk about this, we can do a little segment of a podcast on that.
Yeah. And always,
that's what a portfolio is.
And always reminding people this is not a financial advice or anything that we talk at all. Not financial advice, just our experiences in the investment world, the little that at least that I know. And that's pretty much what we do. And whenever we talk about different type of digital assets, it's just what we are doing, not necessarily a recommendation for any of you guys to actually go do. It's more like an educational thing, kind of like waking up the mind and the brain of what's out there in the real world, because I think it's important to get familiarized with what's going on with the crypto. So just to give you a quick update, I'm not sure why my son is smiling and laughing. I was about to talk about a conversation we had yesterday about, yeah, what's up?
You just made me think of, this is not part of the plan, but we got to go here. You told me pre-podcast, no, not pre-podcast. You told me yesterday when we were talking, when I mentioned on the last episode that all investing is gambling, and you're like, I bit my tongue. I bit my tongue on episode 2. I was like, oh, you should have said something. But we were already at like, an hour and a half, right?
Yeah.
I guess we should go there while it's early enough in the podcast that I still got a strong enough voice to raise my voice in case I have to. So why is all investing not gambling in your opinion?
Oh yeah, I heard that term a lot. As a matter of fact, there's a guy that I follow on Twitter. He's actually in England, and every time before the market begins, now this is a professional guy that's been doing this for a long time, the stock market and stuff. And every time the bell rings at 9:30 in the morning when the stock market opens here in the United States, and the guy's in England, he always kind of like tweets something like, "Yep, the casino is open." Because to him, sometimes I guess he looked at it as a gambling that we are doing. And the reason he says that is because, the Fed is printing so much money. So it's like a casino for him and whatnot. But anyway, the reason I said that, and I was doing this number, biting my tongue when you say, yeah, guys, we're gambling in here, is because, and I know what you meant. At least for me, I believe that gambling is something that you just throw things out there, rolling the dice. I'm going to buy Dogecoin because, whatever, I'm going to take my rolls, it's going up, and that's it. You're not considering any reason why that specific crypto or stock is going up or anything like that. So I look at it more as investing. Not investing, what's the word I was using? Investing was because it's a calculated move that you are making. You calculate it, you're taking many different analysis, whether it is technical analysis, whether it is fundamental analysis, and sometimes it could be news, right?
Right.
Now they myself about to Google it, but that's the reason I see to me that the world of investing, it is still risk, but it is the difference between the gambling and the investing. Now he's going to go Google and see what he come up with, what gambling is.
I just thought of it on the fly, so I don't know if it's going to help my case or hurt my case.
I hope
but
that.
Here, gambling is the wager of money or something of value on an event with an uncertain outcome, with the primary intent of winning money or material goods. Gambling thus requires 3 elements to be present: consideration, risk, and a prize.
Okay.
Consideration, risk, and a prize.
All right, go put up, open another page and leave that page open and go ahead and open another page with definition of investing. By the way, while he's doing that, guys, this is what I love about conversation like this is that, you know, between you and your families, your significant others, you know, you get a chance to discuss different topics of interest. And at the end, you know, you come up with your own conclusion and still keep moving forward. So that's what we're doing with Ronald. I'm still biting my tongue.
You might want to keep it there when I start my point.
Let's see what you got there.
All right, so I'll read it because I know you don't have your glasses on, and we saw that
I got
pre-podcast,
the
and it didn't look.
glasses.
It wasn't a good look on you.
Let's see.
All right, so investing. So actually, investment to invest. Okay, so I'll give this definition. So
I
to
thought you were going to look
invest.
for the definition of investing.
Yeah, I'm going
That's
to the right.
no, but
So
that's where you went. You search for definition of investing. That's what
yep,
you Google. Okay.
yep. So to invest is to allocate money with the expectation of a positive benefit slash return in the future. In other words, to invest means owning an asset or an item with the goal of generating income from the investment or the appreciation of your investment, which is an increase in the value of the asset over a period of time. So in layman's terms, so I'm gonna unshare my screen so I can put you back to being the normal
Okay.
size for the audience for now.
I just
And by the
misunderstood that
way,
you have.
guys,
I just
and by
misunderstood that
the
you have
way,
on the left hand corner. You have something different that I was reading
um,
because you were reading on the right hand side, right? Might be your left. You were reading
yeah,
right there. It says investments. I'm reading right here. It says number right underneath. It says 1 and 2.
okay, yep. So number two, provide
Number
or
one. Number
endow,
one.
expend money with the expectation of achieving a profit or material result by putting it into the financial plan, shares, or property, or by using it to develop a commercial venture.
Okay, that might be a difference between gambling versus going to Las Vegas, right?
I mean, I guess not really. Not if you break it down. Let me. Okay, so now that we got the definitions and you gave your opening statement, here's my opening statement. All right, my opening statement is that gambling is like you doing it in a t-shirt, is investing with a t-shirt, and investing is gambling with the bow tie. Those definitions were almost exactly the same, minus one has bigger words and says that it's going to appreciate in the future, and the gambling says you're going to win a prize in the at a later date. It's the
I
same
guess so.
thing.
Yeah.
So now, and you're the definition that you made me read, like, you know, commercial venture and all that kind of stuff. Sure. If I invest into, I give $100,000 to a company, and they, you know, everyone has to put in $100,000 to buy buy a big apartment building or something.
Right.
You know, people aren't going to be like, that's not gambling, Ron. That's an investment. I'm gonna be like, do I know that those people aren't going to get caught up in a cocaine, you know, in like a whole big thing? They got caught up for drugs or something crazy like that. I don't know that. So as bougie as it may look on the surface, it's still gambling.
Okay.
It's still gambling at the end of the
All right.
day. So
Now
yeah, so to
for
me it's
it's
what was that?
gambling.
Yeah,
All
to
right.
me it's gambling. Yeah.
Okay, so for the audience out there, hopefully they can put some comments and think and see it. For them to write comments in the future there and write comments such as what do they believe it is, gambling, or whether they think in investing. So my stand still stand. My stand still stand that investing means that you are either taking a position on a stock or in a crypto coin that you are obtaining after you had done some further calculations, such as a technical analysis, that you actually research the fundamentals, that you actually see whether that company is going somewhere, right? And after you made those technical analysis and your research as far as the company and the fundamentals, that to me, it will consider be investing. And gambling to me will be, you know what, I'm buying Dogecoin today. oh, I'm buying Bitcoin today without not knowing what it is, then to me, that's my definition of gambling. And so everybody already heard Ronald's definition of gambling and
Okay,
investing.
so is it gambling if I say, hey, let's play one-on-one basketball? I'm gonna put $1,000 down. You could put $100 down.
Yeah.
But because I know I have a better chance of winning, my 1,000 will turn to 1,100.
Yeah.
Your 100 may turn to 1,000 or 1,100, right?
Yeah.
But your risk was less, but I'm more sure I'm gonna win.
Right. So to me, that means because you know that you're gonna beat me, right? To me, you are investing $1,000. Now I myself, if
And
I
you're
say,
gambling
I
100.
know that there's no, I know that you're gonna beat me in basketball. You're better than me, and I bet $1,000. I'm gonna gamble. I'm gonna gamble 50-50 that I still have a chance to beat you. Yes. So you will be investing $1,000 because you did the research knowing that I am a young guy born in 1912. And you know that I'm older and my fast speed is not there. And you have calculated
Or I
that
say,
you can do better. Now, in my case, if I was to say, you know what, after I took all the risk and everything, I'm going to put $1. If you say 1,000 and I convince you that I'm going to put $1, then now I'm going to consider $1 an investment because I calculate all the factors and I say $1 I'm going to invest in this thing because of the thing. So that's my.
So tell me why the lottery is not investment then? Because I'm putting $1 in to earn 1 million.
Right, but I didn't analyze anything. All I know that my chances are 1 in a billion or whatever it might be. I just threw
you can analyze
there.
that. You can analyze it. You can go, you know what? This gas station wins more often than that gas station. That state wins more than that state. And you know, if I choose these numbers, then this combination, like for example, if there's 6 numbers, you can go, okay, each one needs to be odd, odd, even, even, odd, even, odd. And there's books written on how to increase your chances of winning in the lottery. So my point at the end of this,
you became an investor in the lottery.
Here's the middle ground then. The middle ground is gambling is when you know you didn't do your homework and you put money in anyway.
Yeah. All right. So there you go, guys. There's the soul for X. Bye, guys. So thank you for coming in and tuning in today. We'll see you next week. But that was a good one because you know that's something that me and Ronald sometimes go back and forth in trying to define. And don't believe me or not, it goes with my other son too. We got some heated arguments when it comes to the cryptocurrencies. We go back and forth, and that's the reason I say I love my other son because at the end we come with an agreement that watching the UFC is probably the best bet. You know, with him. Now, with that said, just a quick rundown, if you don't mind, Ronald, just to jump ship, kind of like at least in my side of the story. I think in the last short video, you know, for all those that are brand new, and I know that if you're getting into the crypto digital assets, it's a long process. You know, a lot of times you might watch episode 1, episode 2, 3, 4, 5, and 1,000 episodes of anything, and you still might take some time to get it. So I understand that. And so just take one step at a time. I do want to just share real quickly, at least what I said last time, you know, of what I got. I'm still currently invested in the crypto market. I did not panic at all. Blink, blink. I did call my Ronald. I'd say, Ronald, you know, the market is tanking, right? You know this, you know that scenario, you know this other scenario. And we had a conversation. And that's good when you have a conversation with someone, especially me. I'm kind of new in the crypto world, even though I'm, you know, and I'm also like a trader versus an investor type of guy, right? In that sense, because I trade stocks and whatnot throughout the day. So, but with that said, I wanted to share with you guys that I'm still in the crypto world. I'm still holding some of these coins that I mentioned to you guys. Again, is not an investment advice or anything. I'm just giving you this so an idea of all the different type of cryptos are out there. So when you go back to that website that I described on my last preview clip that I did, and you go there to
market
research,
cap.
yeah, they go to pre-halving.com, they can research those coins for more information, right? And you decide to do what you want. So for all purposes, real quickly, I am still holding ADA, they call Cardano. I still holding Bitcoin. I will probably right now. I got what they call diamond hands. They might melt tomorrow, but I have no idea. But Bitcoin to me is the long term deal. No matter what happens, I'll be holding it for a long time. So later on, we can explain more. I think we did that in a couple of the episodes. So Bitcoin, I still got. I still got called something engine, ENJ, Echo, November, Juliet. I still hold something called One Harmony, ONE. I still hold something called VET. Is that VeChain, Ronald? VeChain, that's how you pronounce it? VeChain?
Yep. Yep. VeChain.
I still hold another one called VTHO, VTHO Vitro. And the last one I'm holding is ZIL, Zilica. Those are all the holdings that I have. And I did broke one of my rules, and I was not diamond hands. I did panic.
So Doge.
Hey, I did sell my Doge. I bought it like the 27 cents, and I sold it at 28 cents. So hey, I made 1 penny minus taxes. Maybe I made half of a penny in profits with the amount of money that I spent on that Dogecoin. And so I'm not going to go into the details of that thing, but I wanted to at least disclose that portion, that I'm still holding.
The IRS is going to go, schmuck, made of pennies. He doesn't have to pay taxes. He doesn't deserve to pay taxes.
I don't know. Hopefully I don't get audited. That'd be crazy. They come and audit me because I didn't pay Doge one penny taxes on each. I don't know. Yeah. But I wanted to just say that, real quickly there.
I know you've been giving an update on your portfolio. Mine's just a little bit more complicated. I own 24 different ones. So the way I'll break it down is I have 2 in the 6-figure range. 1, 2, 3, 4, 5, 6, 7. 7 in the 5-figure range, and then I have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17 in the 4-figure range. So they range almost all of the ones my dad said except for one. Even though I do own one, but it's like dollars. I don't even count it. I must have got it through there's courses that you could take on Coinbase called Coin Earn, and it's like 3 to 6 little clips that you answer questions to after listening to the small little video clips, and you earn a little bit of the cryptocurrency, the one that maybe sometimes they just list it and they want to teach people about it, so you can earn a little bit of crypto from there. So that's kind of how I accumulated, not those 24, but I accumulated other ones through that way. So, yeah, so that's my portfolio. My portfolio has taken a severe hit, about 140,000 or so right now. So it's actually gotten a little bit better when I hit the refresh button. Because when I looked at it earlier this morning, it was more like 160 hit.
So that's why you lost your voice, right? You just confirm why you lost your voice.
No. No, but I don't, and for me, I've always been more private when it comes to that. I think starting late last year is whenever I started talking about budgeting to people in the gym, people at work, just because I was really surprised how much people don't save. And I ran across different stats, like, for example, most people can't pay for a $500 emergency, all these kind of things, right? So just know while we're doing this podcast, we don't know everyone's specific financial situation. And we want to be sensitive to that too, right? Because we might be throwing out crazy numbers and you're like, man, I'm not even, saving $500, right? So just know, like, we're aware of those things. The whole point of this podcast, while it has been more crypto based, there will be other topics such as real estate, budgeting, stocks, 401ks, like just our opinions on things like that, right? What it takes, what does it look like to be financially savvy in today's world? So that's why you constantly want to stay tuned. I encourage you to make us part of your daily or actually we're pretty much been launching 2 videos a week. That's our goal. We might record it Friday, record it Monday. We record it Friday, we're uploading Monday. We record Monday, we're trying to upload Wednesday. That's our commitment, is to do 2 videos a week. And most weeks, if we hit it, that'll be a success. So I encourage you to stay tuned, watch the episode from beginning to end. If you really care about changing your financial situation, you really care about listening in on 2 people that love talking about this kind of stuff in a non-formal way, then watch every episode, break it up into small pieces. That's why we have the timestamps below. We have the timestamps there. We have links below so that you know where to go to sign up for buying crypto, where to buy stocks. We have 2 options on there, Robinhood and Webull. There's others, but those are the 2 that are like very user friendly. And then if you're got questions on taxes, we have a tax link down there now for Crypto Tax Trader. It's one that I use. These are all things that we'll eventually do tutorials on and record them so that you can always go back to it. But why wait for that, right? Click on it, mess with it, go through that process of doing it. Remember, the difference between gambling and investing is really gambling. You're just doing things without knowing what you're really doing. You're just throwing it and seeing what sticks. And investing is that you have some kind of plan, right? You have some kind of like strategy to it. So those are the things, a quick service announcement that, we are aware that everyone's in a different financial spot. So that was my update for portfolio and my disclaimer. I actually, when you mentioned the coin market cap website last time, I wanted to go through that in detail, but I wanted to do it in the solve for X kind of way. And the solve for X kind of way means that we have a purpose to everything that we do. We have a target we want to hit, and we want to hit that right into X, right? So I don't know if there's anything you wanted to say before I share my screen again. And we're going to go through the CoinMarketCap website. We're going to go through the Bitcoin chart from the earliest recorded time on TradingView. So we're going to go through all that kind of stuff and like sprinkle in our thoughts as we go through it. But that'll get you familiar with the website as well, in case you haven't had a chance to go into CoinMarketCap. What's the title of your podcast? Oh, what you mean, like this episode?
Yeah. I'm just kidding. So I'm assuming we're going to do something regarding what it takes to be successful in crypto.
Yeah, there you go. Yeah, I mean, we shouldn't freak out right now, right? I mean, everything's going down. Everyone's like, oh my God, the world's on fire, right? Everyone that was, if they made it to be a crypto millionaire, they're not a crypto millionaire right now, unless they were significantly a crypto millionaire. So people are losing money left and right. And I wanted to take this time to calmly go back, see how far the market has come, so that we get insight into where it's gonna go.
Yeah, right? If you want, we can go there. And I did have some articles that I would like to share with the audience. So probably if you want, I can wait till after you're done with your portion of it.
All right, that sounds good to me. All right, so this is CoinMarketCap. So this is the first page where it has Bitcoin, and I wanted to start off by going through Bitcoin's history before I show you a couple features on this site.
Oh, hey, I'm sorry, I just blinked. Did you start from CoinMarketCap, or do you start right from Bitcoin?
I started right from Bitcoin on CoinMarketCap.
Okay. Do you want to start just from CoinMarketCap so they can see the entire webpage, how it opens up?
Yeah, we could do that.
Because I'm slow, remember? 1912.
All right, so if you go into CoinMarketCap, this is what you're going to first see, right? You're going to see the top 10. And this is going to be important later because I'm actually going to take you through a history of this. So that's why we'll come back to this site. But here you can see the top 10. And if you keep scrolling, you'll see all, 9,000 plus coins on there. So you'll see the different ones that we have mentioned on here. You can see the current price as it is right now on most exchanges. So this is the aggregate amount, because Bitcoin can be trading at different prices depending what exchange you're looking at. But this is more or less the price that it is right now. The 24-hour change the 7-day percent change, the current market cap, which is all the money that's invested in that asset. And the way you get this number is you multiply the price times the circulating supply, and that's how you roughly get the market cap. We have very little deviation in between that. And then this last part is the volume traded per 24 hours. So how many people are buying, selling, how much money is going back and forth in a 24-hour period is this amount. And then it gives you a little 7-day chart. So you kind of see directionally speaking which way it's going. All right, so I'm going to start off with the history of Bitcoin, and then we're going to go into historic snapshots of coin market caps, top 10 from the beginning to where we're at.
Now, what was the market cap today for the crypto?
So Bitcoin right now is 950 billion. So it fell under its trillion mark. The total market cap for the entire space is 1.8, and that's at the top over here. This part over here. So
that's a significant number too, right? That it recently reached past the 1 trillion, and not close to the 2 trillion, right?
Right. We did cross over 2 trillion, I believe, very briefly. But whenever I go through the history, we're actually going to see how much this has grown.
Oh, okay.
Yeah.
All right, go ahead.
That's okay. Okay, so this is the history of Bitcoin's price on coin market cap, and then the oldest price that they have is May 3rd, 2013. So Bitcoin was trading at $94. Can you imagine that? $94. Yeah. We would own a lot of Bitcoin right now.
I don't know I don't think we'll be doing YouTube channel videos right now.
I think we would. We probably just wouldn't be doing it from the same location that we're doing it from.
Yeah, that's for sure.
Okay, so I wanted to show this because you see a straight line, right? I mean, it looks like a flat line, and that's just not true. And we're gonna use another website called TradingViews to see all the details of that space. But I wanted to start off here just to show you that even though Bitcoin is said to be very volatile, the simple reality is when you zoom out, it really isn't. And this is something called a linear chart. And basically with a linear chart, you're basing it off the prices on the y-axis, that they're at equal distance, right? So 15,000, 30,000, 45,000, 60,000, 75,000, they're all equally spaced. So you don't get to see like how much up and down it's going during these time frames. This is where Bitcoin became super famous to most of the general public. It was back in 2017 when it hit like just under 19,000 or just under 20,000 rather. So this is where you would see that kind of stuff. Now, if you click on here, the log chart, this is where it's based off the percent change in price on the y-axis. So you can see that whenever I'm investing, I'm actually in my head seeing the chart like this. I'm seeing it like this because this is more of a reality of the percent change in price that's actually happening. It's why it's very difficult for me to sell Bitcoin. Once I buy it, I've never sold it. I've always kept accumulating. So with other assets, it's a little different, but with this one, I know the direction it's going. Now it may dip from here to here, and it may be like, oh my goodness, the world's ending, but not really. If you see the overall trend, it's up and to the right. Okay. So I only show this part not because this is a thing that you want to use when you're putting your buy orders, but it's a good thing to use to kind of bring clarity, and especially on days and weeks like this, like we're currently going through, where it seems like the price is going down. Think about how much crazy news there is right now, and the crazy news is that little bleep right there. Look at that little bleep in that corner. over here where it's today's date, right? April 23rd. And when you zoom out, nothing has happened. So this is why I'm not freaking out right now, because nothing has really happened, you know? So that's how I get grounded in my belief, and why I feel so that like my decisions are validated by data, not necessarily by emotion. So that's something I wanted to show on here. We'll come back to CoinMarketCap in a second. I wanted to give people a brief history of Bitcoin.
That's good.
Okay, so we're starting out, and I'm going to move this over to this way. All right, so we're going to start out on TradingView, and this is a website that you can use for. I love TradingView because there's so many tools that you can use so that you know whether you think you're buying at a good price or not. There's tons of like different things. My dad knows a lot about this stuff too when it comes to trading. So maybe we'll go through this in a future podcast when we're actually talking about trading or something like that. But whenever I'm thinking of putting price orders, I like this chart because they have a lot of tools to the left side that you can use. But I wanted to use this as well just for giving an illustration as to how far we've come. The oldest Bitcoin chart on TradingView is the Bitcoin to the US dollar on Bitstamp. So right now we're using a 1-day candle, a 1-day chart, which basically means every candle is a 1-day candle. So the opening and closing of the 1 day. I'm going to zoom in just a little bit. That should be good enough. Okay. So the opening price on there, August 19, 2011, Bitcoin was trading at a height of 1185 and was a low of 1115. It opened at 1185 and it closed at 1169. And that was the very first day of trading. I can't move the mouse to show, but that's going to be, hopefully the audience can see. The O stands for opening. So that's 1170. The H stands for the high of the day, which is 1170. The L stands for a low of 1170. And the the close, the C stands for close for 1170. So that's going to change depending what day you're looking at. You can see here, Bitcoin had a crazy spike this day. I think the high was $15. If I can get it right on the right spot. Okay, let me zoom in real quick so it makes it easier. Yeah, so did I get it? Right there. Yeah, I hit a height of $15. So that day was a crazy good day, right? Like if you had walked into that day or the day before, you were buying it at $259 at the highest, and you were hitting a high of $15, and that only lasted a day before it dropped back down, back to the $2, $3 range, right? Okay, so then this is what the chart looks like, and you can see it trading from anywhere from $2, $16, back down to $10. Whoa. And then this yellow line, I did it for the convenience of the Solve for X spam as well as my dad. I don't think I ever went through this with you, actually, now that I think about it, right?
I don't remember.
So Bitcoin has these things called halvings. And this is something that most people that have already bought Bitcoin will probably know about, at least heard of. But what they may not have heard of is how many halvings have they had? What's the significance of the halving? Like what does that even mean, halving? It sounds like a zombie apocalypse, right? But the first halving happened on November 28th, 2012. And basically what that means is that I'm looking at a paper just so I give you the exact numbers. The block reward was 25, which basically means as miners, right, people that have these computers and they're mining for Bitcoin, and we can always get into particulars another day, but this is just the gist of it. As miners are earning reward or trying to mine Bitcoin and they get rewarded for that, during this time they were earning 25 Bitcoin per block, right? Per day, 3,600 Bitcoin was being created. And remember those numbers. So jot those numbers down if you have a pen and paper around you. So they were earning 25 Bitcoin per block, and they were creating 3,600 Bitcoin per day. Okay. And again, the reason why these numbers are important is because as we start thinking about why we're investing in the space, these numbers are going to become more and more important. So we're starting to paint the picture on the white canvas. After that Bitcoin halving, or on the day of the Bitcoin halving, give or take, Bitcoin was trading at closed the day at $12.37 in 2012. All right. Not even, that was November. Let's see over here. April 10, 2013, Bitcoin hit a high of 259. Right? And let me pull out.
$2.59 or?
Yeah, $259.
$2.59, yeah.
Right. So it hit $259 at the height. Divide that by the $12 that it had during the halving. That would have been a 21.5x. Right? So if you had, remember from the first or second episode when we were going through how many X's, no, it was the first episode where we explained what X's are, right? These are not percentage gains, these are X's. They're multiples on your money. So if you had put $1,000 in it and it did 21.5x, your $1,000 would have turned into $21,586. So you could do the math, right? If that's $1,000, if you had put $10,000, you would have made $215,833. If you put 100,000, 2.1 million, right? So that's the power of that halving. Now the story doesn't end there, right? That was so from November to basically March or April 2013. So in that time frame, that was the height, the low and the height. It corrected. Ooh, I went too far. I keep showing it because my screen's lagging. So that was the height. It corrected down pretty significantly after a couple of days. And on April 16, so just like 3 days later, it corrected down to a high of $82.
I bet people were scared then.
Yeah, I mean, imagine, right? You bought it at $12. Yeah, it does matter where you come in, how how you feel about that volatility, right? But it doesn't matter. You see something trading at 259 and in 3 days, it's at a low of $49. You're like, this thing is gonna die, right?
Yeah.
Okay, so that was just 3 days later, and we're gonna keep doing that. So
can I give you a timeout there?
Yeah.
That time frame in 2012, that's when I started hearing about Bitcoin, and of course I didn't know anyone near me or close to me that I can talk to about this stuff. I was just basing it upon news, and I just remember that I wanted to get involved, and I did.
Hang on, you froze.
But that prevented me from coming in because obviously it was so cheap.
Go
Yes.
back and start again from when you got in. You're good now.
Oh, okay. I said that back in 2012, I wanted to get into Bitcoin because it was something new, and unfortunately, I didn't know anyone that I can trust to talk to and how they felt. So I was just being myself, being pulled by the media and the news and all the negative things about it. And unfortunately, I listened to the negative side of it, and it prevented me from actually investing at that time when it used to be 12. And I am quite sure I would have been scared to death when it got to 256 and then it dropped back again, But I just wanted to mention that real quickly, that a lot of times when you listen to negative news or the fear of missing out or the FUD, right? FUD.
Right.
And what's FUD again, Ronald?
fear, uncertainty, and doubt.
Fear, uncertainty, or doubt that is created by media and many different outlets out there, you obviously didn't join, and that kind of like mess you up in the long term. And right now, I believe we are experiencing almost the same thing on today's day. But anyway, go ahead, Ronald. I just wanted to throw that in there because you were looking at a could have been millionaire back then, and I missed the
Yeah,
boat. Here we are.
multi-millionaire. All right, so now it went through its period where it hit a low in July 6, 2013. It hit a low of $63. So it hit that low of 42, came back up. It's been going up and down. The lowest part after that part, you see that little dip on the chart in July 6th, was about a low of $63. You can see here by time it got to October of 2013, you would have been trading about $181. So the people, and never forget this, right? These charts are very, they dehumanize what's going on. But every single candle on here, every single point on the candle exists because somebody bought it. So imagine how the person feels when they bought it at 259 and they still are not in profit, right? How many people would have quit by then, right? Okay, so the minute I move this chart, you're gonna see the thing absolutely explode. Boom. Right? So in November of 2013, the people that had held for 259, they would have been this small little part in this thing over here. The people that bought it at 259, the people that bought it at 259 would have now had on a low day, on a December 3rd, 2013, while they're visiting or getting ready to visit their family for Christmas, they would have been the smartest people in the room. They would have had Bitcoin at a USD value of a low of $1,000. So $1,000 divided by the height of 259, they would have 3.8x their money. So $1,000 would have been 3,861 if they had bought for the first time at the price of 259 and just put $1,000. Their $1,000 would have turned to 3,861. Of course, Bitcoin had a dip. And the important thing to think is like, okay, only one halving happened November 2012. And by December, so 1 year later, give or take, it went from $12. Remember the price in 2012 was $12. 1 year later, the price was $1,000. Just 1 year later, after the first halving. All right, so we're gonna keep moving along the history. That was the height of that halving. And you will see how the price slowly keeps dripping and keeps dripping and keeps dripping, keeps going lower and lower. So from the height of December 2013 and it keeps going low. I mean, you see this chart right here is depressing. You can't tell me how many people would not have quit and sold, right? From, again, I'm going to specify it. It's around November, December of 2013. And it's now November and December 2014, right? 1 year later. Now you're in that, you're with your family again in the next Christmas. And they're like, yeah, so how's your Bitcoin doing? Bitcoin is trading at, give or take, on December 26th at a low or at a high of 332.
Now, with that said, right, if you don't mind, everybody, right, have their own different, what they call them, investment objectives. So if you would have bought at $12 or $240, and then when you were showing here in November, December 2013, when Bitcoin was, what was the high Bitcoin got in? Somewhere in the 900s?
It was at a low of 1,000 and a high of 1,088.
Right. So, you know, depending what people's investment objectives are, and what are your goals, everybody think a little bit different. Some might have sold and take the profit and run, because if you have invested $14, $20, $30, $100, and that money that you invested generated you $500,000, hey, I think I would have been taking the profits also at that time frame. So I think just to let the audience know that we're all different when it comes to our objectives and goal. And of course, you're going to go on and explain later on that if those people that would have held since 2013 to today's day, they still would have become, millionaires at that time. So I just wanted to put that in there, that it is at the end of the day how people feel or what their objectives is. As long as you don't pull the trigger too fast or start losing money.
And this is something that me and you talk about a lot, right? Like, I kind of have developed this frame of mind just through my experience in investing.
Not talk,
is that
debate.
I know. Well, with
argue,
you is argue.
Debate.
I mean, we have a rule for a reason, right? Anytime you want to sell, you have to call me. And the thing that we're gonna come to is like, okay, so we're not selling it all. That's off the table. We're never fully exiting out of our position. Not in this, at least not in this space where it's still very, very new, right? How many people really own crypto? How many people really own digital assets right now? It's between 5 and 10% of the population, and we talked about that on the last podcast a little bit. So that's why we never fully exit our position. But there's nothing wrong with taking 25, 50% off the table in the profit and then waiting to get back in at a lower price, because there's usually a lower price coming. But remember, back then, people didn't know about that. You were flying in the dark, right? Okay, so going into May of 2015, I'm just picking random dates as we progress through this timeline. So there's no significant date, no significant event necessarily on May 28, 2015, just for simplicity's sake. The candle that day would have closed at 236, right? Actually, I got another point before I keep going. This is why when people say dollar cost averaging or short DCA is the best investment strategy, the reason why they say that is because, yeah, you could have bought at 259. Yes, you could have bought at $1,000, but you could have also been buying on the low days if you were dollar cost averaging. If every paycheck you were putting a portion of it into this asset, right? So you would have been getting good deals, discounts. You would have been paying high a little bit, and then you would have been paying, average, right? But your average overall would have been probably way better than trying to time the market. And I don't remember who said this saying, but time in the market usually pays more than timing the market. And that's why this is kind of what this is illustrating, right? Not everyone has a crystal, no one has a crystal ball. All right, as we keep going, Bitcoin is just staying dead. It gets a little bit of a pop here. I'm sure there was some good news or something like that. November 2015.
Wow, you're not looking at the crystal ball?
It's not a working one. Oh. Too fast. Okay, so look, people knew the halving was coming. So I'm just going to put in quotation marks, smart money, meaning at this time when people started knowing, oh, okay, so you could look at the programming language of Bitcoin and you're like, you know what? I know the next halving is coming around this time, right? And the halvings happen after a certain amount of blocks get produced. The next halving happened in July 9th, 2016. And those are exact dates. I went back and plotted it on the chart. So July 9th, 2016, Bitcoin halving was done. And you can see how the market was going up leading up to it, right? So they were trading, they were accumulating leading up to the halving. This halving, these are the stats for it. So remember, the first one was November 28th, 2012. And that's where the block reward was 25. The Bitcoin created per day was 3,600. So every day there was 3,600 being created back in 2012. In July of 2016, the Bitcoin reward fell to 12.5. So it got cut in half, hence the word halving. So people that are mining Bitcoin, they used to earn 25. Now they're only going to earn 12.5. There used to be 3,600 Bitcoin being put on the market for people to buy. And now there's only 1,800. So everything got cut in half. So the deflation, that's where the term deflationary asset comes into play, is that it's deflating how many is being, being put on the market for people to buy. Where in the dollar versus something like a fiat currency like the dollar, euros, etc., where they're printing money, they're adding money to the supply, right, at an increased rate. Here, you're decreasing the supply.
Because Bitcoin is limited, right? They can only be 21 million.
Correct. Yeah, there's a hard cap of 21 million where there is no cap in fiat currencies. This is why, yes, accumulating assets is smart, but accumulating dollars isn't. Not for the long haul, not for your investment, not for your retirement plan, so to speak. Solely saving doesn't make sense for those components alone. All right, so Bitcoin had the halving, and it goes down a little bit. So the halving happened in July, and in August, it actually traded a little lower, and then you see an explosion. Look at that explosion. All of that. So by the time the explosion was over, and remember, no one knew if the explosion ended in. It could have ended in June 8th, 2017, right? I mean, that was an increase. The high price in that June 8th of 2017 was 2,815. 2,815 versus the halving price of 663. So 20, let's just call it 2,900 divided by 600 and I'll just put it somewhere in the middle. So 647. You basically did a 4.4x of your money. And by now we know what X's mean, right? So that's how much X's you did in this first little peak. But it wasn't over yet. It hit there and it trailed back down. It came down to a low of somewhere near 1967. It rallied more. And in September 2017, it hit 4,700. So 4,700 divided by the 647 from the Bitcoin halving date of July 2016 would have been a 7.26x. So if you had waited till September 2017 instead of selling in June of 2017, you would have made about 3x more on your money just by waiting.
Mm-hmm.
If you continue to held though, and you would still be smart, you don't do these X's are not common in any other asset. Real estate doesn't do 7x. You bought $100,000 home. You think your home's worth 700,000 right now? No. Right? So
right.
Stocks, there's few exceptions, but it does happen in stocks, but very, very rare. Then if you had waited over here, let's call it over here, November 2017, the price would have been 7,244 at the height. So I'm going to do the math again. 7,244 divided by the 643 at the price of the halving would have been an 11.26x. Every $1,000 would have been $11,000 and some change. So if you had waited to November 2017, so just 2 months later, right? First was July 2017, September 2017, November 2017, your money's multiplying. If you magically had held it, not even a month later, it would have hit a price of 19,220 at the height. So the X's, since now I'm getting people addicted to looking at X's, 19,220 divided by 643, you would have multiplied your money 29.89 times from 2016 halving. And I'm gonna test your memory, Dad. Do you remember the price it was on the halving of 2012?
$12, $13.
You got it. Hey, age ain't nothing but a number. Don't let nobody tell you nothing different.
It's the fish oil. You gotta take that fish oil every day.
19,220 divided by $12. So we're gonna go way back in time. We magically were able to hold it from $12. That would have been 1,601x. So if you had held it from 2012, November 2012 to December 2017, 5 years. Now that may seem like forever, and in many ways it kind of is, but it really ain't all that long on the time spectrum, long enough, right? It's 5 years is, almost a year more than high school for most people, hopefully. Most college graduates happen in 5 years too, probably, right? So 5 years really isn't, 20 to 25, 25 to 30. Those things fly like that, right? You would have 1,601 extra money. If you had put $1,000 in there, your $1,000 would be $1.6 million. All right. If you had put $10,000 in there, you're looking at $16 million. $10,000 back in December of 2012 to December 2017, 5 years, $10,000, you would have been a decamillionaire, $16 million. There is no other asset that you could take $10,000 and make it 16 million. You could be an entrepreneur and do it. It's possible to take $10,000 and build a business that's worth 16 million.
You can gamble on the lottery.
You can take $10,000 worth of lottery tickets and possibly hit it. But this is something that with knowledge, we know where it's going. And through all the FUD, through all the craziness of up and down markets, through all the, people say volatility is a bad thing. No, volatility gives me buying opportunities. It gives me opportunities to sell and buy at a cheaper price. So volatility in itself isn't bad. Now, volatility in other things can be. For example, a volatile relationship might be bad for your health. A volatile workout habit or a workout might be bad, kind of, right? Like if you stop, you start, you start, you stop. Like you're not going to go nowhere, right? So things that are volatile, they can be bad, but not in this case. In this case, it gives you opportunities to sell and buy, sell and buy. Now, if you're not a trader, which I'm not, I buy when it goes low. So that therefore I'm always winning anyway. What were you going to say?
No, I wasn't going to say anything right now.
No. So I wanted that to sink in for everybody. Right? $10,000 in 2012. You could have took out loans to get $10,000, and you would have been able to pay those loans many times over.
No, right? we don't advise that, of course. I would just say a gambling mentality that he just threw that idea. But never go borrow against your credit cards or get a loan for it
The smart way would be to
unless you know what
manage
you're
your
doing.
cash flow. Well, the smart way is to manage your cash flow so that you have money to invest. And
Unless you were
I
one of
think,
those, unless you were one of those visionaries, that guy that actually convinced his wife. Now this is way back in the days. He, at the early stages, convinced his wife to sell his house, sold his motorcycle, his vehicles, and as much as he could, and put everything into Bitcoin. And a couple of years later, he actually became a very wealthy individual. So, but that's just a story.
Yeah, you can find them. I think their name is like the Bitcoin family. Yep, yeah, that's what they call it. I forget his actual name, but yeah. So this is where that comes from. That's the power of investing. So if you have a spending problem, right? If you have these, hopefully this motivates you. I think most people that I have talked to that have gotten into crypto or gotten into investing in general, what I find is that they tend to spend less money on things that go down in value. Right? Because now if I have $1,000 disposable income after I pay my rent, utilities, all that kind of stuff, most people are gonna spend that $1,000 in fancy restaurants, experiences, vacations, and at the end of the year they realize like, man, I don't have nothing. But if you're investing in something, you're gonna think twice before you eat your money. Literally, you pay $100 for a steak, you're literally eating your money in an hour or less, right? So this is why I've always been pretty frugal, is because I actually spend my money, but I just switched the word. I'm actually investing my money. So investing and spending they're cousins. So I encourage you to really, really look at these charts. Think about what you really want for your family, because if you look at this stuff, you had the money. You had the money to invest. Now you're going to have the knowledge, and hopefully you can get your cash flow in order to invest. So that was at the height of it, right? The bubble popped. People think everything was dead. Not even at the low point. So I can get it right there. All right, so February. So December, January, February, you get a price of a low of 6,600. So imagine that, right? Someone bought that price of Bitcoin at 19,000 bucks. And today that Bitcoin was worth, or that day, that Bitcoin was worth at a low of 6,600. So let's do it in reverse. If you had put $1,000 worth of USD money into Bitcoin at the height of 19,200, whatever it was, and your money went down to 6,600, basically do 19,000 divided by, I'm just going to call it 6,500. Your money would have lost almost 3 times its value. So $1,000 would have turned into $333. You put $100,000, your $100,000 would now be worth $33,000. That hurts. Your home doesn't go down that bad, right? You buy a $300,000 home. In a matter of 3 months, your home is not worth $100,000.
Right.
So this is where the fear kind of comes in, and I'm painting it both. I'm trying my best to paint it both ways so that people know what to expect, when they get into this space. Because this is a 24/7 market, and I think you could actually speak to that a little bit. How you had the shock that it was like, man, this is a 24-hour market, 365 days, 7 days a week. I can't sleep.
Yeah, this definitely the crypto market is totally different than the regular commodity and the future markets. Normally the future markets opens at 9:30 and closes at 4 p.m. Eastern time, and obviously the crypto market is open 24 hours a day. So sometimes when you go to bed, it could be at a different level, and when you wake up, it's at a different level. Or if you are one of those owls like I am sometimes, you could be in the middle of the night at 1 a.m. and that thing is still like going up or down. So it is one of those 24 hours a day. That's for sure.
Fast here. All right, so we're gonna keep going down, and that 6,600 wasn't the low point. So it really took a dip. It's funny that these dips happen around Christmas sometimes. The high points happen and the low points happen around Christmas time. So if you're sitting with your family, December 2018, Bitcoin's low price was 3,422.
There goes your Christmas spirit.
That's horrible. I mean, $19,200 divided by a price of 34.22. Your money lost 5.6x of its value. I'm not doing the math on that one. That hurts, even for me. All right, so if you notice, we haven't talked about the halving much, right? It happened back in 2016, July 2016, right? And so Bitcoin's going up and down. I mean, it hit a low of 3,100. I think I just saw that on the chart. Yeah, 3135. And that was December 2018. It hit a high of roughly, this thing skipped on me. June 2019, it hit a high of 11,796. Right? So all of these are trading opportunities, right? Trading opportunities, accumulation opportunities. If you had bought Bitcoin at $3,000, you would have been feeling like a genius, right? While you're sitting there at Christmas and everyone's talking about how much money you lost, and you're there buying more of it at $3,000. A couple months later, those $3,000 Bitcoin are now worth 11,700. All right.
And it's something just to remind the audience, because easily you can get lost in the translation. And I had that issue with my sister when we were talking about crypto. And of course, right now it's at 50 plus. And she's like, well, I'm not going to buy $50,000 worth of Bitcoin. I don't have $50,000 to buy, a coin. And so right now that you are in that stage of mentioning, yes, when you started saying that you could have bought Bitcoin at $12, of course you can go buy Bitcoin at $12 with no problem. You probably can buy it at $200, $300, even $1,000. But important thing just to remind everyone here is that you buy Bitcoin also in fractions. You can buy in fractions. So it's not like you have to go buy a $12,000 Bitcoin, but you actually can put $100 and buy a certain percentage of fractions. So when I'm saying, I bought Bitcoin, please do not come to my house and try to rob me thinking that, man, that guy is buying Bitcoin every day. $50,000 per pop, right? Or 52 or 60,000, but you're actually buying in fractions. And that's important to know. And I think we discussed a little bit of that, what that meant in one of those episodes, and we perhaps can go in detail in the future on why it's still important to even buy in fractions. But I just wanted to recap that, Ronald, since you are mentioning 3,000, 4,000, so people don't think that, oh, wow, I don't have $3,000 back then to have bought one, but you could still be buying fractions right now. And those fractions that you would have bought back then, today it would have been worth thousands and hundreds of dollars and potentially even millions of dollars in today's value.
Right. Yeah, I think on episode 1, we showed on Coinbase how $100 would have got you 176,000 sats or satoshis, right? Which is the denomination of one Bitcoin. So there's 8 digits worth of denominations before you get to one Bitcoin. So every 100 million satoshis equals one Bitcoin. Okay, So the next halving, which is the most recent one, so the third halving, what happened May 11th, 2020. Right? May 11th, 2020. This is when it became, in my eyes, a for sure thing. This is when I knew I was gonna go absolutely, to the wall, and I was gonna front run this, right? So this is when I started. I actually got in around April. If I'm not mistaken, my first major purchase was around April 28th. But I think I got in at the earliest around like end of March. So around April 28th, April 24th was my first big purchase. And I did it because I knew the halving was going to happen. So the halving happened May 11th, 2020. Now, the Bitcoin block rewards for the miners, it dropped from 12.5 to 6.25. So it did another halving, right? So remember, initially they earned 25 in 2012, 12.5 in 2016, and 6.25 in 2020. So every 4 years, their stuff got their rewards got cut in half. The amount of Bitcoin being dumped on the market, and because of this halving right here that happened in 2020, became 900 Bitcoin was being produced per day. So 2012, 3,600 were produced per day. Then 1,800 in 2016, and then now 900 per day because of May 2020. So the supply just went, how much is being fed into the market just got shrunk. The tube shrank. So the price at the time of the halving, I went too far. All right, at the price at the time of the halving, more or less was 8,000, between 8,900 at the height and 8,500 on the low. So it closed that day at 8,825. So 8,825 was the price of Bitcoin at the halving. Then, not even on January 21, Bitcoin hit 41,422. So 41,422 divided by the 8,800, that would have been a 4.7x. 4.7x. Every $1,000, $4,700. $10,000, $47,000. So a $10,000 investment would have been $47,000. A lot of people sold here, and you can tell they sold because you can see the selling pressure bringing the price down. And that was January. And by time end of January came, the price went from that 42,000 down to 30,800. So it lost $12,000 worth of value because of people taking profits. Now, I don't know, I want to pause here. I know this is when I was starting to tell you about it. It was around December, right?
In December, yeah, Christmas time when you came here.
I think I actually told you about it before that, but that's when I actually visited you and we actually got you signed up on the exchanges.
Right.
So I don't remember exactly when I told you.
Yeah, probably November, October timeframe when we started talking about different things.
Yeah, about 2 months out.
Yeah, I think so. Somewhere in that time range. And then December you came here, we talked about it, about the exchanges, and then February is when officially I started investing in Bitcoin. Not gambling like Ronald said, but investing. I'm going to point that out. Anyway, go ahead.
Oh, man. Okay, so Bitcoin went down. It had a correction, right? It hit around 42,000, came back down to low 30s in less than a week, in about a week or so. Yeah, 20 to 26. And then it shot up. It had its peak February 20. It hit $57,000. $57,000. It had a correction. It hit a low of $45,000.
Mm-hmm.
That was February 27th. And then come March 12th, it hit $58,000. So it set a new high. March, it hit a low of 51, a high of 63. I think the actual high was around 64, but I would have to get it right on the right candlestick. Oh, there it is. I got it. 64,895 was the highest so far for this halving. And right now, people are taking profit, and the price is currently at, I don't know if I can get it. Let me zoom in.
Right now, you talking about?
Yep. So right now, the lowest it's been today, April 23rd, 2021, at the time of this recording, it's a low of 47,555 on this exchange. So 47,555. Mm-hmm. There goes a history of it. So whether you buy it at 65,000 or whether you buy it at 40,000, in the grand scheme of things, the history shows which way it's going and why. The next Bitcoin halving is going to be, it's estimated. No one knows exactly for sure because the halvings is not actually every 4 years. It's a certain amount of blocks that gets produced, right? But the estimated time frame is going to be 2024. So 2024, the rewards is going to go from 6.25 Bitcoin rewards per block to 3.125. So it's going to get cut in half again. And the total amount being available on the market is going to be per day. It's going to be 450. So it's going to go from 900 per day right now to 450. So where do we think the price is going to go? It's a math, it's a statistic, it's a probability that it's going up and to the right. So that's my presentation of the Bitcoin history. I have found very few videos on someone going through it in this way, but this is the way the Solve for X fam thinks about this. This is how we solve our issues. We use math, probability, statistics to make a conclusion so that we don't make it feel as if we're gambling, even if we kind of are.
Yeah, but that's what we said earlier. That's what we said earlier.
So that was the day chart. And one thing I wanted to do was I wanted to switch it, the day candles. I wanted to switch it to the week while I'm live on here. So hopefully there's no issues. So that we can get, because now it's kind of hard to see like how far we've come, right? I mean, for the math's sake, 65,000 divided by the $12, your money would have done a 5,416x. So every $1,000 would have made $5.4 million. So every $1,000 would have been 5.4 million. Imagine if you had put $10,000, you would have been worth $54.1 million. All right, let me try moving our faces to the side. So this is the weekly chart. Actually, I'm gonna have to put this up here. I'll put it up here. So this is the weekly chart. Sorry, the weekly candlestick. So each candle is a week, and that's why we're able to see everything on one view. And when you see it on this view, if you don't see where it's going by now, I don't know what else to tell you.
Mm-hmm.
But this is why I have that much confidence in when I put money in, and I'm putting the amount of money that I've had. I mean, I'm putting money that I've saved since my first landscaping business back in 2015, right?
Don't you still owe me?
Like
Don't you still owe me money for that lawnmower business?
you said, I owe you money for my modeling career too. You already got paid for all that.
I think you only gave me a portion of the modeling business. So you can pay
You're
me
the
in
worst.
Bitcoin. You can pay me in
The,
Bitcoin. So
I pay people in knowledge.
and remember the interest rate. The interest rate was only like 5%. So multiply that times so many X's. That should
Hey,
be a
that's
good
actually a
amount.
good. That's a good podcast topic, the interest rate stuff. But anyway, so let me finish my presentation before you try collecting more money from me. Okay, so this and remember earlier when I went through the log chart and the linear chart. So this is the linear chart where everything is proportionate to the same. So 0 to 10,000 is the same distance on the y-axis or the vertical axis. And guys, this is probably the most technical podcast we're gonna have, just so you guys know. But I just think it's that important that we wanted to put it early in the podcast. But this is the linear chart, so everything is an equal distance on the y-axis, according to set by price. So 0 to 10 is the same distance as 10 to 20, as it is from 20 to 30, 30 to 40, 40 to 50, 50 to 60, right? So, and you can see the amount of increase in price Bitcoin has done because of the halving. You remember way back here in 2013 when Bitcoin hit that $1,000? That was a $12 investment in November of 2012, becoming worth a height of 1,163. Not many people wouldn't have sold there. And then when they sold it, one thing that I come to the conclusion of, and I have two big experiences already, is that when I sold everything, I was smart for a couple days. But I felt so opposite. I felt like an idiot a couple days later because those prices have continued to skyrocket, right? So again, never completely. That's why for me, I'm never completely exiting out of a position because we can see where the history of Bitcoin is going. We can see the history of where the space is going, and I'm going to zoom out into the overall market cap of the space to show you the growth as well. But with this chart, you can see that. I'm going to switch it to the log chart where it's based off percentages on the y-axis versus just price. Remember how I showed you on the coin market cap site why I see it this way so it doesn't look as volatile to me? This is this version on TradingView, Dad. This is why it's really hard for me to sell it and make it make sense by the time I pay taxes. Mm-hmm. The biggest percentage gains happen, yes, in the beginning. But when you add this up compared to what your money's doing, your actual dollars, your fiat, this is a no-brainer. Not to mention, all these numbers is with only 5 to 10% of people investing. Not companies, just people. Imagine when you throw companies into this space. So that's my TradingView presentation. So I don't know if you want to add a couple of things while I get ready for the coin market cap one.
Okay, yeah, no, I think watching timing here, even though people can pause and view later, obviously that's part important to do. Also take a little break and go and eat your lunch and dinner for those viewers and come back, right? So that's a good thing about whenever you're recording stuff, that it gives you the opportunity to pause and come back to it. And I think Ronald's pretty good at putting segments in the presentation that allows you to come back. So regardless whether it is a 15-minute presentation, 30 minutes presentation, whether it's a 5-hour presentation. The important thing is that you can always break it down and come back to it and learn as much as you can, because that's going to be the most important thing for people that are new and people that have been doing this type of investment in the digital assets, to grasp as much information as you can to become more informed. Um,
You know what I was thinking? Yeah, look at the time that we're at. That coin market cap one, we could probably do it the next podcast. We actually have a special guest coming, assuming everything works out the way they need to. So probably the podcast after that, we could do the coin market cap tutorial, because we're already coming on an hour 23. And I had one more segment I wanted us to go through, which was, what does it really take to be successful in the crypto space? And I'll let you. I'm gonna call audible, because the coin market cap one's gonna be a little while too.
Oh, okay. No, that's fine. That's fine. Let's do it. I mean, obviously, there's a lot of stuff going on. Um, I know there's a lot of also positive news going on, regardless the negative news, and I'll probably just share that later on if you want.
Okay. Yeah. So what do you think it takes, now that we kind of went through the charts, right? With the charts in mind, and with the news articles that we shared, as we've been sprinkling it in, obviously there's a lot of uncertainty in the market right now. That's why, we've been having a couple of red days. It's the reason why your portfolio has taken a lot of hits, percentage wise. Mine's been taking hits, dollars wise and percentage wise. But we're taking hits right now. But what do you think it takes to be successful in this space for our audience out there?
What does it take to be successful in this crypto market, in the digital market, right?
Right. I know I didn't prep you for this question, but I'm curious to know.
I know you put me on the spot. Nah, just kidding. In my opinion, there's a different sets, not rules, but different sets of mentality or mindset that you have to have. In my opinion, to be successful in this market that we are in right now, it definitely become more knowledgeable. The more knowledgeable that you become, the easier I believe it becomes in making decisions. And one of those things, what I mean by that, for example, if I'm brand new coming in now and I'm educating myself to become successful in this market, it allows me to, one, I guess I can set up my accounts to be ready. And once that I know in this market when I can come in, I can start either, like you say, dollar cost averaging coming into the market. If it's going up or it's going down, because remember, if you're doing dollar cost averaging, and you're going in an up market, and let's say you can only invest $100 per month, okay, you only invest $100 per month on the up market, and you're buying less and less and less, right? No big deal, 100. But if the market right now is crashing, and every paycheck you're investing $100 per month, that's good. As it's going down, you're buying more and more and more, right? Your $100 is buying you more. So, and of course, the other one is, to be successful in this market is knowing that knowledge. And if you don't feel comfortable, you wait. You wait till you are comfortable. I know it sounds like crazy what I say. Wait till you are comfortable, right? It didn't make any sense. I was just trying to make the point. If you're new, in my opinion, yes, you can wait and learn, or do the cost averaging. For somebody like me, for example, I started in February, and I'm becoming more knowledgeable. To be successful in this market, I do multiple things. Either like I'm doing right now, I just bought some more crypto digital assets, actually in the last couple of days. I'm going to be holding back if I see that it is pulling back more. At least me, I use technical analysis. I saw that he already broke the 50 days moving average, and that became a new resistance. So if I think that is going down, I might decide to wait a little bit longer and then buy more when I think that is dipping more. And if for whatever reason this market turns into a bear market, I know that I'm going to be holding and in Bitcoin becoming what they call a diamond hands, right? That's the terminology that we use. Diamond hand means that I'm not selling my Bitcoin no matter what, because exactly what you just showed a minute ago on those charts, I know whether it is at the end of this year, whether it is at the end of 2 or 3 more years from now, the price of $50,000 Bitcoin will not be there. I know that it's going to surpass that amount. You know, obviously, I cannot use my, I cannot use my, what do I call it again?
Your crystal ball.
My crystal ball to tell you where it's going.
You know, your head started to kind of look like that.
Huh?
Hey, that's looking a little bit more like your head every day.
I know a couple more years it will look that
I'm
way,
gonna start
right?
using your head.
But anyway, you know, I was going to deviate from what we're talking about. Maybe I'll do it in a second from now. But anyway, um, so even though you don't know where the market is going, it might be a you know a bear market now. To be successful for me, like I said again, I know I'm holding at least into my Bitcoin and might be buying more at a different price level if it goes down. And that's what I'm doing because I know in the long term I know where it's going. So that's for me being have those diamond hands. Now regarding my other coins, my other digital assets that I have, for me personally, it depends where my level is in the conviction that I have for those specific coins. Me and you talk about it. I said in my last video, I am buying Deutsche and I bought it. And guess what? I sold it for a penny, right? Like I said earlier. And I don't know, I think it's still down, but some people will hold because they have the conviction that it's going higher. So for me, I'm good with that. It allowed me actually to buy more of Bitcoin and a couple of the coins that to me has more value or I have more conviction into those coins. So that's my way to describe, I guess, my level of success to become successful in this market. Hold the Bitcoin, know where it's going, manage your risk with the other coins, and make a decision whether you want it to continue to be buy, or if you become into a bear market, I'm going to pull back, depending on those technical levels that I just mentioned to you. So that's my 2 cents.
Yeah. No,
Yep.
I think that makes a lot of sense. I mean, I hope that.
Go ahead. Go.
Yeah. Okay. So no, everything that you said is, I agree with. To be honest with you, I wish we would have went through the market cap thing, because now that'll kind of paint the part 2 of it, which is how does all the other coins really do compared to Bitcoin, right?
Yeah.
And it's really eye-opening. Just like hopefully that Bitcoin history from a chart perspective, hopefully open the eyes to a lot of people of where and why we have conviction in this space in terms of Bitcoin. But I know the market cap thing is going to open the eyes of what other coins look like. I mean, I've had friends over the last couple of days tell me about like Safe Moon. You saw that one?
I know it's one. I know about Safe Moon. Hey, come on, I'm in this game now. I know what's going on, son.
I had a friend say,
I know what Safe Moon is.
Yeah, I mean, and I don't even know why this friend asked me, because he knows I'm not known for giving money to nobody. I used to spend time with someone to show them how they can make $1,000, but I definitely ain't gonna give you $1,000. I won't even give you $100 unless it's like if I'm giving you $100, it better be like the best reason ever, and I promise you.
Yeah.
It probably won't even happen anyways, right? But anyway, so the point is that is
a podcast.
Like I said, we got podcasts for days. But no, so when I told him, you got the egghead.
You want to know the story of this, or you want to go with your story real quickly before I forget mine?
Hey, go ahead with your story, because I know you didn't take enough fish oil.
Okay, now you're looking at those 2 things, right? Now, which one you think is more valuable?
I mean, to me, probably the circle one.
Which one?
The circle one.
This one? Well, believe it or not, this one cost me more money than this one. This one is made in China. and it costs probably about $10, $20. This one, you don't remember, you and Carlo may not remember because you guys were little. This one, you know where I bought this one? In Italy,
Mm.
Venice, Italy. And that's the capital, the glass capital of the world. I believe that's what they call, because they handmade these things. They actually handmade. We actually went there and it has a little number or whatever. This one
Yeah.
cost me over $100 back then when we were in Italy.
$100?
No, but over $200, about 250 or something. This one, and this is
Wow.
nothing. There are some other ones that cost you thousands of dollars, bigger ones, and the design is. This one has a little fish inside. I'm not sure you can see it.
Yeah, I can see it. Yeah.
Um, and it's more
You know what
expensive. Now
I
this
didn't
one,
see?
this
I
one is
saw a little. I saw the little circle, like the little circle, like the other ones are like little planets or whatever. This one I
yeah,
see the bubbles now.
yeah,
Yeah, I
the
didn't see it
bubbles and
earlier.
the fish, and this one has little bubbles, and it has a
Mm.
circle,
Mm.
and it looks like it's difficult to make. I'm not sure, but this one was cheaper. So in the end, so this one like $300 just because it was bought in Venice, handmade, and whatever. I'm quite sure this one. I don't know how it was made, but to you, you said that this one was more expensive, right? But I don't know if you want to compare Bitcoin or value or whatever is value to somebody, but here, I don't know. Maybe I was taken to the bank because I pay more
Yeah.
for something. So value is really relative to you, right? Whatever it means. I don't know. I don't know where I was going, but it was something to do with Bitcoin. But
No, that's
anyway, it had to
actually a
do with
good
value.
point, though. That's a good point. And so that's the thing, right? With Bitcoin is just the network effect. How many people are gonna buy into Bitcoin? Can Bitcoin ever get? We call it the term in crypto called flip, right? The flippening, and that's basically when a coin flips another coin. And the flippening is when altcoins or a altcoin one day passes Bitcoin's market cap. There's people that believe that will never happen, and there's people that believe that will happen, right? And that's a whole nother topic in itself. Like, how is that possible? Is it possible? Will it happen? All that kind of stuff, right? Um, but for now, the network effects are in Bitcoin's favor, you know, because of the things like the chart, for example. Um, what else was I gonna say? You actually made me forget my point.
That's fine. Maybe.
But oh yeah, so the next podcast you have to look. So this is the thing that we want SolveForX fans to know what's on the horizon. Next podcast, we're looking for, or you guys should be looking forward to a conversation where we're gonna have 3 people on the line. We're gonna have more than likely our aunt Kathy, or my aunt Kathy, on the line, where she's a Bitcoin newbie. We're gonna give her the free reign to ask us any question about Bitcoin, non-prep, non-nothing. She can literally ask us anything. We may or may not know the answer to it. It may be a conspiracy theories, answer, right? Like, for example, the origins of Bitcoin is there's a lot of conspiracy around there. No one really knows. But there's tons of questions that I'm sure she's going to ask us that the audience will also have if they had the opportunity to jump on with us, right? So we're gonna have her on. The next podcast we'll probably do the coin market cap. So we'll probably do it in the level of detail like we did with this one. And then we also got one that we want to do with the FUD. So we're actually gonna go back in time and look for articles that had FUD all over it. And what does FUD stand for again, Dad?
Oh, what is FUD stand for? I thought I wrote it down. Fear, uncertainty, and doubt. Fear,
Yep.
uncertainty, and doubt. Yeah.
Gotta keep you young.
Hey, that's what it is.
Yeah, but I'm
That's
gonna so we're gonna go over articles that were fear, uncertain, that had FUD all over it, all throughout the history of Bitcoin, right? And I think those 3 podcasts are gonna be the ones that are on the horizon. So if you guys are loving this information, you're finding it useful. I know it's hard to watch it from the beginning to the end in one sitting. Pause it, go back to it. But if you're serious about getting into the space, you're tired of seeing your purchasing dollar go down in value by leaving your money in dollars, then you got to put in the work. it's not easy to become a crypto millionaire. It may be sold that way, but it's not in practice an actual easy thing to do. So with that said, guys, this is the SoftRex podcast, R2 squared, Ron Senior, Ron 2.0, the better version, more improved version, better looking version. And and that's all I got. Good night.
All right. We'll see you later. I'm gonna go do my 2 or 3 mile hike already. So I record a little video in reference to this podcast and whatnot. And we'll see you next time. See you later. Love you. Bye.
Love you. Bye.